Okay, we are live. How is everybody? Oh, it's good to hear. I'm Will. I'm your host of Investor Options or Investor Major Investor. Today's topic, we normally talk about dividend stocks because we want monthly checks. Everybody wants a monthly check, right? We all want monthly checks. I want a monthly check. You want a monthly check. We all want a monthly check. How do we get that? How do we obtain that? Well, if you're in Canada, that's pretty simple. You just go on and create a Wealth Simply account. I will provide a link if you want, but you have to comment and leave a statement of what you want, and we can easily do that for you. Um, I'm here to talk about whatever you want to talk about, as long as it's within um, the business perspective. So without further ado, I can get right into it. Just give me 2 seconds to get my act together on what I need to do here. I'm looking forward to seeing more people come on, but um, right. Okay, so there's a bit of a delay. Sorry about that. I've been trying to fix this. I'm gonna have an echo apparently, so we'll fix that too. If anyone knows about going live, it's a real pain in the butt, just so you know. And I'm going to talk about stocks here in a minute. Just give me a second, everybody. Sorry about the delay. I'm just trying to get see who's on. Okay. Sorry for that. What am I going to do here? Okay, so I'm going to talk some stocks. So, like I said before, this is Major Investor, and we're going to look at a few stocks. Now, we're going to do this really quickly, only because, well, want to keep everybody in the loop of what's going on. I'm a real estate investor. Okay, I do dip into small caps and micro caps and nano caps, but you want, like me, I want a monthly income and return on my equity. So we're going to look at Dream Office Real Estate Investments. They trade at 24.70. Earnings per share is $2.63. So they pay monthly dividend of 8 cents per share. So that's not great. I'm going to tell you why, because it's going to cost you $24.70 to buy one share. Just to buy one share is going to give you $20, $24.70, and you're only going to get 8 cents on that return every month. So if you have one share, it's going to give you 8 cents. Make sense? Okay. Looking forward to seeing everybody come into the channel and voice their opinion. And please make sure you subscribe and like to the channel. Looking forward to seeing you, and hopefully we can make some magic happen on your portfolios. The company I gave you last time was btb.un. There's a little company. I don't know if you're going to be interested. It's not going to pay you any dividends, and these are micro stocks. So please keep that in mind when you're purchasing them. But they have huge potential. So MRS, I already put it on my underneath under my caption before. So you have to go back to that video and have a look at it. Again, one I gave you was btb.un, and it's not the BTB UN that's $107 a stock price. That is not the one. Okay, it's a REIT. Okay, it's a real estate investment trust. Okay, currently trading at $4.08. I purchased it at $4.10. So, and it is down 2 cents according to the records. Now, that being said, they do pay a 2.5 cent per dividend per month. They pay 30 cents. Now, the reason why I love this stock so much, or love this industry, and the reason why I like it is because they pay a monthly dividend. You're able to buy a lot of shares for $4. So for me, I was able to buy a few shares just to try it out to see what kind of dividend polling I would get out of it. And it's not bad. It's not great either. There are better ones, but they're a bit more expensive to buy. IFL, a friend of mine gave that to me to look at, and it's an iron ore company, but it's a quarterly dividend. But they do pay $4.80. $4.80 or $4.60. Hold on, I'll look it up for you. Just give me a second. Oh, find it for you in a second. Okay, now, sorry about that. Normally I got everything organized before I come online and go through everything. Just check this. I'm part of different organizations to get me a few different stock quotes. Uh, just give me 2 seconds, everybody. I'm just going through some charting, okay, for you guys to find out. Dividend income report. The profits of the company is distributed back to its shareholders in its form of cash and stock. Predictable basis. Annual on-time dividends of shareholders, also known as special dividends. So there is reasons why we invest in dividend stocks is because it provides money back in your pocket. You get to keep the shares of the company. And the only reason why I was recommending btb.un is because they just purchased more properties, and these are commercial real estate investments. So they provide you with office space in investing. So if you're interested in investing in office space, that is one huge aspect. Now, where do they invest? It's in plazas. So majority of what they of the people that they get to lease their properties is majority of them are doctors and physicians, pharmaceuticals, and but that's only 67% of their business is the medical. That also includes um, uh, therapy, right? Massage therapy. Um, it's going to come to me. Uh, Physical therapy. So physical therapy, massage therapy, pediatricians. Those are the companies that they're targeting when they buy office space. So they just purchased $98 million last year in office space, and they already have 96% of that office space leased out already. They don't make a lot of money on their real estate investments because they would rather you pay a monthly subscription for the real estate, but over 10, 15 years. So that's why they go with doctors and they go with lawyers for their real estate investments. Um, this is why it's so important. Uh, so trying to decipher what's best in in the meantime for everybody, where to invest, what to invest in. I can't tell you those things. Okay, those are for your broker that you hire personally. I'm an independent broker. I can tell you what to buy, but I can't tell you. I can tell you what to buy. Anybody can tell you what to buy right now, but they can't. First of all, your broker has to have a licensed signature. Any information that he gives you, he's going to tell you talk to your analyst or talk to your personal broker because we're not licensed under you. So then, therefore, we can't tell you what you need to invest in or what you need to do for those investments. And the strategy behind that is it protects me, protects you as the consumer. So if you're looking at MRS, Missions Ready Solutions, if you look at their website, you find out that they make clothing for frontline workers. So your ambulance, your EMS, your soldiers, the guys that protect you on a daily basis. And if there's a war, which we have one right now, and this is bad, right? One of the bad signs of investing into MRS is that America, who buys MRS, Mission Ready Solutions um, clothing line, they also make other things. When you go into the website, you'll be able to find out more information. I'm not going to give you a breakdown of everything that they do because you need to do a little bit of research on your own. Now, they only trade at currently at 30 cents a share. And their market capitalization is, hold on 2 seconds. Market cap is good. Um, and they trade on the Toronto Stock Exchange, under the Venture Stock Exchange rather, but they're still under the TSX. Okay, so they trade at 30 cents currently. Mission Ready Solutions. Their market capitalization is 59 million. Now they just signed a contract for $200 million. Keep in mind that they have 200 million shares outstanding. That puts them at $1 earnings per share, and that's with no deductions. Their EBITDA is 1.3717. If anyone knows what the EBITDA is, earnings before deductions, and so that tells you how much they are worth on paper. On what we have is earnings per share of 1 cent per share. There's another company I was just looking at. They're also 1 cent per share earnings, trading at 34 cents. That's fair market value based on the information. Based on the summation of the $200 million, that puts them at $1. Times that by 10, that gives you a $10 stock price, targeted stock price. But because they're just new and developing, uh, that should see around 16 times forward earnings. So that would put them at $16 a share. If that makes sense to anybody, that's where your market should be, or where it's supposed to be. Um, it doesn't mean that it's supposed to be trading at that. That doesn't. It depends on what people think is fair market value for your shares. That's why the share price is sitting at 30 cents, not $14. It's what people value the stock at, that it trades at. So depends on how many shares you have outstanding, what's your volume. If it's a high volume, that means you can buy a lot of shares and get out with those shares. But the problem is, once it starts getting to the higher fundamentals, so if it gets to $6, $7, you have a million shares. It's going to be very hard for you to unload a million shares when the trading volume is 100 million, 200 million. It seems like it's going to be very easy. No, it's not, because you're going to pick your stock price. You're going to want to sell it, but if you go too high, it's going to drop it down fast. And if you go market sell, you never do anything at market, guys. Okay, when you buy and sell at market, you are taking a huge risk. That risk is, I say, okay, I'm not selling any of my shares until it hits this price. But if I put a market sell buy in, the person selling it, I want to buy 10,000 shares. Right now, the current price is 38 cents, or 30. Let's go with mission ready, 30 cents. I want to buy a million shares at 30 cents. Okay, I have $32,000. I want to go and spend in a high risk stock, which is, I wouldn't suggest it. Okay, and it's going to cost you $32,000 to do this. $30,000 to buy into it. Okay, and that's if you can buy a million shares at 30 cents, which you put it at market. Okay, so let's do a little research here. We'll do a background. We'll see how much money it would cost you to buy a million shares at market. Okay, so to buy a million shares at market, you're looking at 48-cent price. Okay, so you're going to buy 20% right now between 30 and 38 cents. That's it. So you're going to end up paying 48 cents for your average shares at. So you're at 48 cents. You've just boosted the stock big time. But the truth is, how much trouble is it going to be to sell it at 48 cents, the whole million? Well, that's the problem. It's worth $10, yes, but it's currently trading at, you got to look at the market value that's currently trading at, and then decipher how many shares you want to buy. And that's why you do not pick market. You pick a price, you stay with it, you don't buy the whole thing. You know that they only have 200 million shares outstanding, so to buy a million shares might seem a practical thing, but it's very impractical when you don't know the psychology behind what people's opinions are of where it should be. So it's trading at 30 cents. You try and buy it at 29. So your market would be 29 to 28 cents. And then how many shares you want to buy? 50,000, 100,000. Depends on how much money you have, and it depends on what you want out of it. Um, we're in the market of making money, right? Everybody wants to try and make money. It's amazing how many people want to lose money. So keep that in mind. They don't care if they sell it. They just don't want to take they want their stock limits or stock price, and they put their stop limit in. When they put their stop limit in, it protects them. So let's say you went and bought your stock at 30 cents. What's my stop limit going to be? Well, it's worth $10 to $12 for you. So your stop losses isn't an option, right? But you want to protect your assets only if you're 55 plus. You put your stop limits in right away because you don't want to take the hit. You just can't afford it. So your stop limit is going to be 10%. That's the amount of risk I'm willing to take for a stock that's going to give me at least 20 fold on my 20 fold, what they call it, 20 beggars, 20 times my money. Okay. So if it was at $1 and it's worth 16, that's 16 times your money. If it's sitting at 30 cents and it's worth $3, that's 10 times your money. So what is your out? It depends on what's your climb. So for me, I bought Mission Ready Solutions at 39 cents. What should be my market cap? My market cap should be 22 to 24 cents, and that should be my out. No, no, no. That is where I buy more, not sell, right? It's worth it to me because it's in an industry. It doesn't matter if it's inflation, doesn't matter if it's the market collapses or not, because it's a guaranteed contract of $200 million. It's worth $12 to $14 a share for me. So why would I sell it at 28 cents, 27 cents, 24 cents? I wouldn't. I just continue to buy more. I only bought 10,000 shares. I was only willing to risk 10,000 shares. I don't know if it's going up or down or sideways. I just know that this is what it's worth. This is where it's going, and I can't time the market, so I don't. I pick my stock price, what I feel that I can get in at, and then that's it. So when you pick your stock prices, you just want to know when you can get in, when you can get out. Put your stop limits in to protect yourself if you're not sure. So, for instance, as soon as you buy it, you should have a plan. I bought it at 30 cents or 29 cents. My out, if it goes down below 26 cents, my stop limit. So then you put your sell order in, 26 cents, and then you go down, scroll down to where it says stop limit. So you put in your stop limit. It'll say target price. So you go stop limit at 26 cents. Okay, absolute cannot drop below this value, 25 cents. And you put that in for your stop loss. Okay, stop limit. That is your stop limit price. Punch that in, you're set. Punch in your password if you have a password. If you don't, just lock it in. Put it in for multiple days, a week, 2 weeks, 3 weeks, 4 weeks. Check back later, see if you got it filled or not. If you didn't get it filled and it continues to go up, you need to change the stop limit to 20% above where you bought it. And you do that every so often, so you got to watch it, okay? Because you want to maximize your profit. Makes sense. It goes to $1. Well, my stop limit's 80 cents. See how it works? So you put it in for 80 cents. At $1, you go 80 cents, you're out. You made your money. Yes, I didn't, but I want to make sure that if it bounces, it goes to 82, 83 cents, I'm not getting out, because if it bounces to $1.50, $1.60, then I have to change my stop limit to $1.30, $1.40, right? 20 cents off the mark usually gives you your rough estimate. You can go 25 because at that point you're already in the green. Make sense? So every time it goes up, it starts going up. Okay, so it's at $9.70. Your stop limit's at $9. Okay, you put it in there, you hold it in there for 2 months, 3 months. You don't sell it, you just put your stop limit in. So same thing, you put your stop limit in, and you always have to have a plan to get out so that you can maximize your profit. This is the maximum amount that I want to let it go down so that I can benefit from it. Then if it goes to $12, $14, again, stop limit at If it's 14, your stop limit is at $12.50. Okay, that's $1.50 off the top end market on your stock. So you're still, if it slips, you're only down a little bit, and then you're out. Then you make a judgment call. If it goes to 6-7 cents, $6-7 again, you can get back in, and you can get almost double your shares that you sold it at 12. Okay, or 11.50. If it's at 12, you're going to sell it at $10.90. That gives you $1.10. So you kind of get the gist of what you want to do. That's your plan. That's your avenue of attack. And when you do those, it protects your assets. Makes sense? So when you buy, you make sure that when you first purchase it, you want to protect your assets. So that's why you have a stop limit. Sorry about that, itchy. Okay, so you protect your assets that way. When when it starts making you money, then you can lay back a little bit because you're already making money. And no, you don't hold it and wait. You never do it. You always have your stop limit in because you want to protect what you already made. So therefore, when you're looking at something else to invest in, you can look at it theoretically the same exact way that you just did this trade. So that every trade becomes a winning stock or a losing stock, but you're out when it goes down. You're 5-10% and you're out. Okay, for me, when you buy a stock like MRS, you know that it should be there. It doesn't mean it will be there. It just means that it should be there. And the reason why it's sitting at 30 cents is there's not a lot of believers that it's worth $10. And just because an analyst from Nesbitt Burns gave it a buy rating, extreme buy rating, uh, and a target price of $10 doesn't mean that you will, or the market will, or the people who invested in it will. But heavy investors will invest in it because anything for the military is a guaranteed contract. Um, Another stock I'm going to talk to you about, like I'm getting way ahead of myself here. That was only one stock. Can you imagine me talking about, let me go into this. I'll tell you in 2 seconds. Yeah, let me give you a breakdown. SOT.UN, State Office Real Estate REIT Units. Okay, trading at $5.04, and that was 2 months ago. Let's have a look at it now. Watch this actually. See, it was trading at, okay, 2 months ago, it was trading at $5.04, and right now it's trading at $4.99. That's with all the turmoil in the market. You're getting 4 cents off on the share. Now that's amazing because the market has taken such a collapse recently that if you were to buy anything else, you'd be taking a major hit, but you're only down a few pennies on the stock. And they pay a dividend. Earnings per share is 58 cents. And right now, see, that was a couple months ago. Now they're 69 cents per share. So they've gone up. I'll go change that. And they're down 4 cents. So their earnings per share went up to 69 cents. Their dividend, however, did not change. Okay, so they're still offering 40 cents per share per year. So that works out to 3 cents per share. And $5 and $4.99. So FTAI, Fortress Transportation and Infrastructure. Stock price is $28.40. Earnings per share is negative 197. Now we'll go look at them. Make sure on the NYSE. And they've increased to theirs is only now it's only negative $1.46 compared to $1.97 just a few months ago. Okay. And the current trading at, they were trading at 28.40 before. Now they're trading at 22.72. Their dividend is $1.32. Here's the big catch on this. When anytime you see earnings per share in the negative, that is a very bad sign. Very bad sign, because they have to borrow to pay you. Makes sense? They have to borrow it to pay you. Now, how do they get away with it? Which they won't tell you, but how they get away with it? How they get away with it is they're still making money. They're using, they either have two things. Get rid of this. This is an ETF. I don't deal with ETFs. The reason why I don't deal with ETFs is because they don't tell you this, but their holdings of the companies that they invested in, and they're all bank sectors that hold these ETFs, are putting their own shares in there. They're dripping down their own shares that they've invested in there, and they put those in there on purpose so that your money is sitting on their investment. Make sense? So that they're able to capitalize on your money, which is not beneficial to you because there's so many companies that they're invested in. So it looks like a diversified portfolio. It's actually investing into their niche. So they make 30% on your money as soon as you put your money in. 30% goes to them. Okay, a certain amount will go to the brokerage house that's investing for you. So everybody benefits except the person that's got the ETF. So that's why I don't believe in ETFs. Even if you go with an ETF dividend fund, yes, it gives you the diversified, but like I just explained to you, it's going to be not in your best interest. It's in their best interest. And that's why it's such a big thing right now with the ETFs, is to help them make money for you. That's what they tell you, but that's not what's going on, right? They are getting money for you, but you are better off sticking it into your own real estate companies, getting all the dividends back on those companies that you're getting, so that your monthly income that's coming in from those dividends is beneficial to you. Now, if you're the first time coming to me and looking at my channel, I appreciate that. That's awesome. But I really encourage you to go through all my videos, or a couple of them, because I say the same thing about all the real estate companies. I've taken them apart already. I've found out the best companies for you to invest in, to start looking at. I strongly suggest everybody do their own due diligence when it comes to these things. When you find out how many real estate companies there are, how many are actually worth investing in, and how many of them are making money, how many of them are into a growth industry, because it's very tough. Majority of the ones that are $100, $200 are not in the growth industry anymore. They're in takeover industry. They're just buying more and more property that have gone astray. Okay, so like right now, Calgary real estate, like where I'm at, Calgary real estate is awesome. Um, uh, because we have so many non-vacancies, okay, or such a high vacancy rate. Our downtown is only 28% vacancy. So if you're at 28%, that tells you right there there's 70% that need to be. We need an influx of people. Right now, oil and gas is sitting at $90, $99 a barrel US. That's awesome for Alberta and Saskatchewan and Manitoba. We haven't seen that in years, since 2014, 2013, those prices. So when those prices come back, there's bigger demand. But of course, it's just starting. So the demand flow to Calgary is going to take some time to get going. But it's coming. Suncor's already started expanding. So that's a positive sign. So when you see huge corporations doing that, that means there's going to be money coming back into Alberta, influx. And right now, the reason why we're paying so much at the pumps, and everybody's going to hate me for this, is because of Trudeau. Okay, Trudeau's crap over carbon tax. Remember when carbon tax came out? He wasn't making very much. Well, he's making a crap load now because that carbon tax has been high. And if you don't look at the pumps and you see 146, oil and gas is trading at $100 a barrel. When oil and gas is trading at $100 a barrel, who was in power? J.W. Jr. Bush. Mr. Bush was in power. We went to war with Iraq, Iran, um, Iraq, and uh, Syria, Jordan, and Afghanistan. When we did that, oil prices went shot through the roof, but there was no carbon tax. And when it went $1.40, oil prices were sitting at $120 a barrel, $130 a barrel. So you do the math, okay? What is carbon tax all about? Carbon tax is only about what? Going green? Hell no. It's about taking money out of your pocket. That's exactly what it's for. They don't want you spending your money. They want to keep it for themselves. Okay, so getting away from that because I'm getting sidetracked, but that's the whole thing about oil and gas. So in our real estate rental property in Calgary here has taken a big hit. So we're going to see some more businesses getting taken over and more real estate properties becoming more available as we get more and more companies that invest in real estate come here and buy out our properties for next to nothing. Next company is RioCan Real Estate. They're at $22.75. That was a couple months ago. Earnings per share was $1.43. Dividend was 96 cents per year. That is amazing. Anything over $1 is amazing. But you're paying $22.75. Now let's look at RioCan today. And it's REI. REI. Okay. RioCan Real Estate Investment Trust. Okay, so RioCan Real Estate Investment Trust is currently sitting at $24.89. It was $22.75 2 months ago, so it's up. Okay, they make earnings per share is up also $1.89. And they pay a dividend of $1.02 now. See what I mean by growth? They went from 22 and they're at 24. They're up $2 from 2 months ago. And they've increased their dividend. It's over 12 months. Next dividend payment will be on the 3rd 07. They're on the TSX. Okay. Monthly dividend, 9 cents per share per month. That is awesome. But you're paying for it, right? So like, okay, 6 times. That's 6 times B2O. Are you getting 6 times more money? It's trading at 9. BTB is at 2.5 cents per share per month. And it's trading at 6 times what B2O is trading at. BTB, not B2O. BTB. B2O is B2 Gold. For those that don't know, it's also BTG on the New York Stock Exchange. And they're a gold stock. And yes, they do pay a dividend also. And they're a little undervalued right now. But I don't recommend them because anything that pays you quarterly dividends is a bit of a red flag. Okay. It's not a red flag, but it is in you want to make sure if it's paying a quarterly dividend, you want to make sure you're benefiting from that quarterly dividend. That's going to pay you a certain amount over what you're already getting paid in order for it to be worth it for you to take money out, put it into it, take it back out, and put it into that stock. There's lots in here that do that. Let's have a look here. Let's see what we got for dividend. Okay, Royal Bank. I announced Royal Bank one of my um, stock picks before, and that was because it's trading at $180, and they provide you with a $4.60 dividend, and they pay monthly. But who can afford to pay one share $148? Okay, so for every share, it's going to cost you $184 to buy that share. But you're going to get $4.60 return on your dividend every month. So is that a good thing? It is a good thing. But there's, if you look at it and say, okay, if I had $50,000 to invest in, or $10,000 or $20,000, and this is why I need you, everybody, to look at other ways of money coming in. Okay. The reason why is because market trends is about your money. Okay, so when you buy, like if you look at it and go, and I mentioned this in my other videos, okay, and I don't like repeating it. Someone told me you got to change it up, and I absolutely agree with that. I think that we should change it up and not talk about the exact same things over and over again. But I got to strive on this point. Okay, real estate investing is like you taking the money out and investing it into a property. You have to look at it the exact same way. If you don't, you're not going to see any return to you unless you just want to test the market. You want to test it to see if you're going to make any money. Absolutely try it, because if you don't, you won't know. And if you don't, you won't see any return to you. So whatever you're willing to lose, you stick it in there. Okay. But make sure you put your stop limits in and everything. But you have to remember, this is like buying a house. Okay, I'm going to go out and borrow the money to buy a house. It's the exact same thing. Okay, but you don't go out and buy a house without equity. You go out and buy a house when you have equity. You have to have cash. Okay, so how much would you put down on that house? 20% right now. If you already own a house, you have to go put 20%. If you want to go buy a complex, 20%. But the complex would be $1 million. Okay, why would you want to do that to yourself? Why do you want to wear all those hats? You got to wear your accounting hat. You got to wear your maintenance hat. You got to wear your finishing hat. Then you got to do your property assessment, and then you got to do property valuation, and then you have to do some collecting. You got to collect the money from the people. Okay, that has to be set up, and then you have to know the rights and legalities of collecting the money, and then what is considered a break of contract between you and the renter or renters, a breach of contract. Um, you have to know all those things. So it's not simple. And if you want to get into it, even more so, um, to do up a contract, and then you have to do some background research into the person that you're renting it to. Not exactly easy unless it's a complex. Complexes are a little easier, but more complexes, and if it's residential, it's just a mess. Okay, so why not just take the money that you're going to put it into your real estate and invest it in real estate? You find out that it's got a better rate of return for you, and you get the increase with the stock price, and you get the dividend pull on it. Is it fast? Is it like technology? Is it like Bitcoin? No, but it's secure. Very, very secure, depending on the stock that you bought. Now, if you buy mortgage-backed finance companies, um, that's good money when the mortgage rates are extremely low. In inflationary problems, that's going to be extremely high risk, okay? Because there's not going to be a lot of people borrowing money. When it first starts increasing, people get scared. They now go, I need to buy now to get into the market before I can't afford it. The problem was we couldn't afford it before, so it makes you think you can afford it now. That's the problem people face. So unless your income is this much and your profit share that you're looking at is XYZ, you're not going to make any further funds. So therefore, why would you invest it? Okay, so you own your own house, you want to buy a restaurant, but you don't want to own the restaurant, you just want to lease it out to a restaurant. Okay, how much money did you need to come down with that? You need at least $60,000, $70,000. Why not take that $60,000, $70,000 and stick it into a company that's going to make you money every month? Yeah, but it doesn't make me as much money. Yes, that's true, but you're not making as much, but it's more secure. You don't have to do any work, and you get to watch it and grow with the company that you've already purchased. And they've already spent the millions of dollars investing into it. They're the ones that wears the hats. They're the ones that go out there and collect the money for you. They're the ones going out and then they're giving you back a huge dividend as part of your thank you for holding their shares in their company. It's a To me, it's a no-brainer, but that's me. Okay, it's everybody's got their individual perspective, and yes, market is based on psychology, people's psychology in the marketplace. But what do you want to own that's going to make you money? That's the bottom line. What do you want to own that's going to make you money? The only thing that's going to make you money is real estate, 100% guarantee. Okay, if it collapses, then the whole network collapses. Okay, think about it. If Canadian Tire can't pay their bill, what happened? The lawyers can't pay their bill. What happened? If the doctors can't pay their bill, oh, that means there's better opportunity somewhere else for them. Pharmacy, pharmacy. Everybody needs Medicare. Everybody needs medicine. Everybody. Doesn't matter who you are. Everybody needs medicine. So those places have a hard time going out of business unless they're oversaturated. So how would you know it's oversaturated? When you go to the marketplace, you see everything has got pharmacy. There's nothing else, just pharmacy. Well, you know darn well that pharmacy is probably outrated and probably a few of them are going to go under. Well, that's a guarantee because not everybody can be in pharmacy. Not everybody can be a medical practitioner. I go down the street and I see 17 massage parlors. They're all competing with each other. Well, obviously, not all of them are going to all of them going to stick around. Um, Friends of mine are in hairstyling, stuff like that. Same problem. They're not going to be around long. Anyway, thank you for coming and staying and sticking around. I'm hoping next time we can do this every day. That would be great. Keeps you well informed of what's going on in the marketplace. Right now, the biggest investment strategy right now is oil and gas, and it prolonged to be so because of market conditions. And what's going on right now? Well, Ukraine is under heavy fire from Russia. So we're going to have an influx of oil and gas pricing because Biden and the administration for the World Economic is not targeting Putin's regime on oil and gas. They've targeted everything else, and that's a very scary analysis because if you're picking on the bully in the room and he's sitting on enough enough missiles to blow the world up 8 times over or 180 times over, and you're pissing them off, and everybody's pissing them off, you're not in good standings. You're going to be in terrible trouble. Anyway, that's my take on it. I want to wish everybody a great finale, and thanks for tuning in, and thanks for coming. This was Major Investor, and this is my report. And today marks the 1st of March. Like I said, I'm going to try and do these every day. I don't know how successful I'm going to be, but make sure you stay informed and keep up to date on activities, and let's make it prosperity, shall we? Thank you. Make sure you subscribe and like, thumbs up, right, on my channel. I'm sure to get around to you whenever I can. Thank you and have a great day. Bye. Out.